Good afternoon. It's 12:34. It's 26 minutes going into the closing bell. Dow, NASDAQ 100, and the comp. Let us not forget this wonderful S&P down 16 handles. Like I said earlier in the morning in our pre-market segment, was that look for those lows, but if you break them support levels, that we were technically in a reversal to support levels. Now we have broke them. And this is where that, once again, that October 4th low of 2011 rally on up to the last week's prior highs and whatnot is at jeopardy, because we are not making higher highs in the S&P. We are making lower lows. And once again, you've got every sector getting a haircut here and now. And once again, when they walk them higher and they consolidate at resistance, it's time then to buy the put options. And that the put options were marked down. And then late in the day, as we go into the closing bell, they're getting marked back up. The calls, which are the 605, they're getting marked down. I get to buy this 610 call right here, everybody. Now, I'm willing to own this one, and I told everyone this morning, right, Tom? You see how they come down here, MMTs?
Yep.
Give me your limit orders. Does anybody have any limit orders on this?
380.
All right. Do I got the right bid?
I would say so. We are below the market.
Yeah, but the people that were itching to own them, they got all in and they're marked down. 610 call is getting marked down. We're printing 611.87 with that wonderful sell side short tape. Isn't that wonderful? And what do we mean by that? We mean that Google is selling down, because it is. And not only that, when I show the Google reversal, when we were up here, this is exactly where we were having conversations. And we were having conversations about that two teeny structure right there. One teeny up, two teenies down. So you got your two teenies up, your two teenies down. You came back up. We were right here involved in this together. You could not break above it. It started to go where that diamond reversal came into play, and it went down, and it violated all these half bars and went below it and straight torpedoing down. And then, yes, this is where Will was getting out with his first round of profits. He learned, though, that the upper resistance level was still in play, and the gap down was the confirm of staying in. And look at they're dropping the prices down. Now look at this one. This is the climactic bottom part of it, which I love, because that brought it and marked it down to 612, and I'm loving how that bar's growing. But what I'm really loving the most is how I get wholesale over here on these calls that have been marked down on the 610, and how I get that wholesale low bid from that 990 high, and how I will take that entry and make good of it at that wholesale price, and then I, as an MMT market maker, will sell it higher back to the public. And that's what we enjoy. That is a market maker model and the public model that all of you have been aware of for your whole time that you've ever been involved in the buy and sell tape, period. And the thing about it is that it's always about buying wholesale. So when you're waiting to get your wholesale entry over here, this side of the market broke out right at about $5.50 here. About 50 cents off of that low. You broke out, and your ask, look at what they're worth, 80, 830 by 860. 830 by 860 830 by 860 to 615 put, which is rocketing right now at a 520. They marked that down. It just made an intraday high of 630 on the 615, and that just so happens to be at where the equity is trading below it at 613. The wholesale bid was here. And that's the differences. If we take a look at the 625, let's see what kind of premium they're giving this one. See, the lows were 840 and they marked them up to 1360. Now they're 1190 by 1250 because the stock stopped going down. It made a low. It did not. How many lows? Is it going to break the intraday lows on Google here? So they're marking that bid down. This side of the market caught a bid of $1 since we were doing this here right now in the last 10-minute period. You could have made yourself at least 80 pennies on the calls when that bounced off that bottom. And it did. It did. It's right here's the chart. Look at that big diamond alert bar, and they popped it right up there. Look at that. Look at that 19. That's a weak IR. Look at, boy, it went down 0.64. Ended up minus $4.85 movement, actually. Wow. They really, now that's a short. That's called a negative debit ratio. Negative ratio going down in value equals short side equals put side, as Ken Flagg would tell you. Not only that, you can see 820 by 840 when we were featuring it at 520 by 550. It made a wonderful $3 move. It hasn't broke the intraday high, but it's a $2 ratio above the previous day's close and a 3.2 ratio above the swing low to the 830 print right here in this live video now about that rollover short debit trade in the name. And why? Well, when it broke these diamonds here that we kept talking about in that two teeny consolidation, as I sat here and went through it with the whole group of MMTs, that this was it right here. And what happens is the selling started once it got below it. Right there, it started. And even you could be taking them right here because that's a confirmation right here. And that's a follow through, and that one is too. And the thing about it is, the gap back down is that next confirmation. And you got this consolidation on the intraday low. Once again, on how to trade put options. Examples, entries off of those lows, deflated prices. And we sat here and we were going through this whole little movement. And we even talked about how this diamonds were lower than that one. Yeah. And how the triple diamond support level was going to be the tail of the tail before that move even happened. Is this true or false, MMTs? So, Will, this is what it looks like in the negative ratio, which equal long short debit. So you got your short debits are much greater in value because people sold. Look at that short intraday. Bid and ask. Puts 5 to 820 by 40. I get to buy these call contracts over here at a very cheap price. It's a weekly options expiration. It's a closing bell. They took the premiums out. This is what happens. Here we got this $610 put down to $1.45. 410 was the high, 255 was the close, but now look at it printing 270 by 290, meaning that if you break that 612 low and continue to go lower, then naturally these premiums will continue to rise. Why? Because they were the cheapest side of the market during this third options expiration day of the week. And I talked about the third day. You have the Lunch hour session is about where you're getting in half of that 5-day period, 2.5 days out of 5 days. And let it be known, the identity of reversals and buying wholesale now that these are getting marked up. The put's marked up. 610 put, boy, what a markup. But look at that. That 390 put that we were talking about over here at $4.20 by 40 cents right here is working very nicely on that Apple 390 put, breaking out to all-time highs and making all-time lows in Apple. Look at that. And look at this put side working. Look at it going higher. We will conclude learning how to buy put options in a monthly options expiration based on equity trends and directional movement down for the put side and directional movement up to highs like this for the call side.